everyone, and welcome to the Clopton Capital CRE podcast. Today we have Ms. Deborah Cannon on. Ms. Cannon is a 40-year plus hospitality veteran. She currently serves as the president and COO of CUSA LLC, a nationally ranked and recognized hospitality and property management company. Ms. Cannon has worked in all facets of hotel operations and sales and marketing and has managed over $550 million in hotel assets. Ms. Cannon's expertise and experience spans full service hotels, resorts, to boutique luxury hotels, to select service and limited service. Ms. Cannon and CUSA have managed over 45 states and in the West Indies. So Debbie, thanks so much for coming on, and it would be great if you give us a little background on yourself and CUSA and how you guys started out.
Terrific. Thank you, Jake. I appreciate the opportunity of talking with you and just spending some time just talking about what's happening in our industry. Just as an introduction of my background, I actually started my career with Hyatt Hotels many years ago, and then was with Brookshire Hotels, which was a major East Coast management company. And I worked my way up from just a director of sales all the way through to a corporate director of sales and then a vice president of development with them. Prior to going with Brookshire Hotels, and I was with them for 8 years, I was with a major East Coast group that managed different hotels and some 4- and 5-star hotel properties, members of leading hotels of the world. So worked in that arena. Brookshire primarily did a full service distressed assets. So really cut our teeth on learning how to do projects from the ground up in terms of underachieving and troubled assets with Brookshire. Brookshire completed a private placement with the Wall Street Investment Group, and the gentleman who was the president of Brookshire was Chuck Taylor. And Chuck Taylor and I decided to branch out and join one another as partners and form CUSA. It was originally called Cornerstone, and then we shortened the name to CUSA. So today, fast forward, Chuck passed away this past year, but Chuck had been had Alzheimer's for about the last 5 to 7 years, and so we were very sorry to see him leave CUSA, obviously. But I've been running the company for the last 7 years in his absence, and now moving forward. So it's been a interesting and challenging ride. We've been through as a company really 4 major economic downturns. We understand the process of this extremely well. This one is very different, but all of them had unique personalities, if you will, to themselves. So it is looking at what's happening in our industry today and what we are doing in these challenging times is something that is very, I like the challenge of the opportunity, but also it's something that's very unique to any economic downturn that we've been through to date.
Right. Yeah, this one is definitely different. So what are the types of assets you guys are, primarily manage in hospitality, and then how were those ones specifically affected by the pandemic?
Yeah, we manage all different types of properties, hotel properties. We manage full service as well as limited service, select service assets in all different categories, if you will, all different franchises, and in all different locations. And some fared better than others. When the pandemic first hit, one of the things that we were very centered on was not closing down any hotel that we operated. And out of the 35 hotels roughly that we operate, only one closed down, and that was in Orlando, Florida. And that was already in a very distressed situation prior to getting into the pandemic. So I think that closed for other reasons. Keeping the hotels open was extremely important to being able to weather the storm and start the ramp up much quicker. We actually took over some assets that did not do that. The owners were not able to keep the hotels open, and they called us afterwards. And then we went into those hotels and had to reopen them and get them going again. What really became evident to me in that process, and although I knew instinctively that we needed to keep everything open, when I saw what happened to this particular hotel that we took over for the owner, that he did shut down, is that the hotel lost all of its L&Rs, all of its business, and had to start over from scratch. Our hotels did not do that we did not close down. And so therefore the ramp up time was a lot shorter. Today, if you look at different hotels, as the pandemic is lifting, and you're seeing the really leisure travel come back in a stronger way, hotels that are in destination locations, i.e. like Panama City, Florida, or on highway locations where you have a lot of leisure travel, are doing very, very well. They're actually exceeding their 2019 numbers. So you do see some good pent up demand, if you will, in the leisure segment that you're benefiting from in those hotels. But in those hotels where it's a heavily group market, or it is something where you really rely on corporate business, they're slower to recover. You're seeing some of the pent up demand that'll increase for a small or shorter period of time, and then it backs off. So I'm cautiously optimistic about how that ramp up is going. We're seeing numbers off the charts in some leisure markets, but you're seeing slower growth where you're more dependent upon corporate and group business, which is taking longer to come back.
Right. Yeah, we've seen that too, right? Like there's a very healthy liquid consumer that wants to go out and travel and do leisure. And then, some hotels we've seen were insulated kind of from what happened because they're in industries like, they had a lot of trucking customers or something like that, right? But yeah, it's the corporate stuff we've seen that's taking longer to come back for sure. The guys that had to shut down that you saw, I mean, was there a trend to kind of like the reasons why they shut down? Was it their choice, right, to try to save money, or for the most part were they just forced to, or was there any sort of trends you saw there as far as the guys that had to shut down?
I think when the pandemic first started, there were a couple of things that happened. Some local governments were very aggressive in shutting everything down, and you had to fight back. If you just acquiesced and shut down, that was one option for you. But we fought back in most of those markets and won. In other words, if the government said, well, we want everything shut down, and they would classify hotels as non-essential businesses, so they wanted to just shut us down, we then went to bat to get our hotels designated as essential businesses, so that they could stay open. Now, that didn't mean that they were running, great occupancies. You had to dramatically cut your expenses. You had to dramatically do things that, go after business. And we really did. That was traveling during those times. Walmart, Amazon, traveling nurses, doctors. Kim House, our corporate director of sales, was every week putting out new guidelines for aggressive sales and marketing campaigns for specific pandemic business. So and actually many of the franchises that we work with picked that up and asked us if they could publish that to their franchisees at the time. So we took a very aggressive stance in terms of really deploying our sales and marketing efforts to make sure that we could stay ahead of and get as much business as we could. Those owners who did not push back against the government, in other words, saying, no, we are an essential business and we need to stay open. Some of them just got scared and thought, okay, I can't operate at single digit occupancies. How am I going to cut expenses to be able to weather that storm? What other programs? The PPP was very instrumental in being able to help owners. The the deferment of mortgage payments and things like that certainly helped owners. And so therefore, you had to tap into all of those programs. There were some owners that chose not to do that. And I respect that. I just think that really cost them, if they were to look back on it now, it may have saved them a few dollars during that time frame in being weathering the storm, but it cost them dollars in the long term of trying to reopen it and get it back up and going. So it's a trade-off.
Right. Yeah, we definitely saw the guys that took advantage of all the, government incentive programs and the deferments of PPP and the EIDL loans and, right. I mean, it goes on, right? I mean, really be able to hang in there, kind of weather the storm, and just get through it. And, I haven't really seen a lot that didn't try to take advantage of them. I'm sure there were, right? But yeah, I mean, it's definitely helped things out. And I mean, so when the pandemic first hit, we were getting, people that are looking to pick up hotel assets at like discounts, right? And that really didn't materialize because, the people have been able to weather the storm so much. So we really haven't seen, a lot of people lose those assets and, now they're starting to come back. So, it's great to see that, kind of the doom and gloom that people were talking about didn't really materialize.
Yeah, and that is interesting to me because I think you're right. There are a lot of people that thought, okay, that a lot of hotels and even our special servicer clients. And by the way, we certainly are getting more that are in that, really not in the actual receivership stage, but in the workout stage, if you will. We're seeing a lot more of that than we have in past economic downturns. You see more on the books that could go bad, but the actual reality of them going into receivership and has not been the tsunami that was thought was going to happen. I think two reasons for that. Number one, the government has done a lot of things that were able to push that out. But those programs are coming to an end. So now what you have to say is this asset in a market that is going to recover quickly? If it's not in a market that's going to recover quickly, i.e. a lot of your university towns are still shut down and very dependent, your property is very dependent upon that business. The same thing with large group hotels. So some of those programs are coming to an end. And will those assets be able to now sustain without those programs? And nobody knows necessarily the answer to that. But I think you've had a situation where it really is an artificial propping up, if you will, of assets that probably would have gone back had they not had all those programs to rely on. Most certainly. So let's see what happens in the next phase when all that goes away, and it is going away. So now, will they come back, or will the owner, does he have enough cushion to be able to sustain it and keep going?
Right. Yeah. I mean, I think the SBA programs are coming to an end, at the third quarter this year, and then obviously the IDL and PPP are pretty much over with. So yeah, I mean, it'll be interesting to see who's able to hang on and which types of assets, end up, right, like go into foreclosure in special assets. So are there particular like sectors of, the market that, let's say like particular franchises or, like limited or select service that are outperforming, others, inside the kind of like travel and leisure space? And I think we all know, corporate travel is having a tough time. But I mean, in the assets that are doing well, are there certain ones that are outperforming relative to the rest of the market?
That's a great question, because I think people would tend to think, well, the strength of the franchise, that's what's going to pull it through. And in some cases, in the long term, that will be true. But we have, everything from choice products to Marriott products that are doing well. And we also have some that are doing poorly. It depends on the location, and it depends on the type of clientele that the mix of the business was. If it was heavily weighted to corporate and group, meaning over 70% was corporate and group. They're not coming back as strong. They're not, those segments are going to take longer. But I have a comfort in and a quality in Panama City that are doing record numbers, running in the 98% in occupancy, over $177 average rate. They're amazing performances. Now, do I think that that is going to last forever? No, I think that's a lot of that is driven by pent up demand. And once that demand is satisfied, then it'll back off. But I also think that you have to, and we've been very aggressive in this, you've got to be aggressive in going after business. And our sales and marketing departments are doing this, going after business that is traveling, that may not have been a part of your segment before. And that's how we're sustaining those hotels that, are in those 70% markets where your corporate and group is 70% of your business. We are really in going after business that they wouldn't normally go after. And those hotels are ramping up. They're getting to that 50 and 60% range. And that's good. We'll keep sustaining that until that other business comes back. Okay. So I think there are ways to that you got to be aggressive in going after business that is traveling that might not be what you did before, and being creative about doing that. I think that's extremely important to being able to weather, what's happening. And I also believe that it's not by, I don't think it's just a given that every hotel is going to come back and that it's going to come back strong because the markets are all going to recover. I think it's what you do on the ground, as well as what the franchise is doing for you, that's going to help combine together to make us be able to come back strong.
Got it. Interesting. So one thing we saw in the pandemic, it is, OTAs. And for anybody that doesn't know, online travel agencies are OTAs, kind of like their marketing efforts and what their efforts kind of pull back. And I was wondering if you, with your new marketing efforts, are seeing a lot of business through OTAs, or if it's more direct, or if that ratio has kind of stayed the same, or what that looks like today.
Yeah, I think a lot of hotels, you've got to have a combination of both. And right now, when you are looking at markets where you're trying to grow, in other words, you're going from single and teens in occupancies to grow back up to the where you were in 2019 and 2018. You've got to open up all chains to do that, because not everything's back. And right. So I think that what we do is in every hotel, OTAs is something that we try to use to our advantage. It's not something we like in every hotel. We certainly like to replace it with business you're not paying those kind of commissions on, but they're necessary evils. So you got to do it. But you play in that market strategically. You do your revenue management, you do the things that you need to do on a weekly basis and sometimes on a daily basis, depending on the occupancies of the hotel. But we are using those to our advantage to fill in when the demand is not as strong, because those markets have not fully come back. But I absolutely believe that one of the reasons why our hotels are doing so well, and I will tell you, in our entire portfolio, and we are across many different markets, many different segments, group, full service, and limited service hotels, I think we may have 2 hotels that right now, in the months of really from March through June, have exceeded their 2019 numbers in those months. And I may have 2 that have not, of all of our portfolio. And I credit that to really a very strong and aggressive creative sales and marketing strategy that we keep going out there every single week and saying, okay, what else do we need to do? How do we adjust this? What do we need to do to gather more momentum? Because that Walmart, Amazon, those types of people are traveling, but those contracts are limited. In other words, they go away, they come and then they go out and you have to replace it. So we've got to keep coming up with additional strategies as to what to do. And I give our sales and marketing department a lot of credit for remaining very focused and creative in doing that. And that's why their numbers are where they are.
That's great. Yeah, I mean, definitely the people that were able to pivot and chase business in the right areas have done pretty well. Yeah. So as far as corporate travel, right, in contracts, I mean, have you guys seen that start to pick up? Are you getting more interest in contracts and corporate travel, or is it still remaining really muted, or somewhere in between? Or
yeah, it's somewhere in between, because there are different markets, obviously, that that corporate comes back faster. In other words, in New York City, it's not coming back fast.
Right.
In Atlanta, it's coming back faster. So it all depends on what I believe. It all depends a lot upon the attitude of the government and the regulations that they're backing off of, that make it more, as the vaccinations get out there and people feel more comfortable traveling, you're seeing corporate come back. Some of that you're not going to see come back because they feel like they can work better from home. I'm of the school of thought that in person, you're never going to be able to replace in-person connections. And as much as we might like to do that over Zoom or in the electronic world, and that's been a wonderful thing during the pandemic, and people have really gotten used to using it. I still think that corporations will find that in-person relationship is invaluable and you can't do without it. So maybe they won't have as much as they had before, but they'll definitely come back. I think you're seeing that in the group market too, that our major associations realize that they lose their association membership when they can't meet and
Sure.
when they're not doing the group business. So that will come back. And it's just more and more in different pockets of the country as you see the states open up more. In other words, have less regulation about masks and gathering and getting together. As you see those restrictions being lifted in different states, the less restrictions, the quicker that comes back, and the more that you're going to see both corporate and group recover. Because I think in the end, corporations understand that in person will never entirely go away. And the same thing with your group business.
Right. Yeah. I mean, just for instance, in our industry in general, right? I mean, you have to travel for certain things, right? I mean, if I'm doing a loan for somebody, you have to do a site visit and a property inspection. I mean, there is just some corporate travel that's always going to be there for sure.
Right.
I mean, I think, the Zoom adoption may have taken, maybe taken the froth off of corporate travel, and, some corporations are going to, look to, kind of pull back on expenses a little bit, but it definitely seems like it's going to come back, eventually. When conventions come back in a big way, I think people get more and more comfortable. And yeah, I mean, it's definitely a comfort level, I think, for employees right now too, and whether or not they're comfortable traveling.
Yeah. And I'm glad to see what our industry is doing. The major franchises are loosening. They're doing more of an honor system, and you're seeing that. In other words, if someone has a vaccine, they don't need to wear the mask, and,
Right.
and therefore it frees up our industry. It frees up our employees. It frees up the traveling public. They don't feel like it's like a hassle to go into travel, although the airlines are not there. And so you're still struggling with.
No, not from some of the videos I've seen. No,
Yeah, that just makes it, when you're seeing, I saw on the news where you're seeing, fights break out on airlines and stuff because people are just frustrated with this. This is not an enjoyable way to travel. It is not, conducive to large scale travel yet. And so that's got to change in order to see a, normalcy come back, if you will, of a general, ongoing normal traveling public. That's got to change.
Right. And that's a good point too, is I think, a lot of people, when you're talking about hotels, we think about, okay, what's the hotel experience going to be? But you got to get to the hotel first, right? So there's definitely is, there's definitely consideration for the experience of getting there in the first place. So that's a good point. Yeah. So one thing, we're doing right now is financing a lot of new hotel development, actually. A lot of the projects that were supposed to break ground during the pandemic, were mothballed, and now they're starting to come back, right? Lenders have loosened credit, and investors are more comfortable, and we're moving these projects forward. For hotels that are opening, right? Like now, this year, in the coming year, what are some of the challenges you see for brand new hotels that are opening, and what is some of the advice to investors that are just coming into this market with a new asset versus guys that were here the whole time and have kind of figured it out?
Yeah, to me, I think I think that the long-term trends are good. I think that you have to look at different markets and say, okay, how, if this is a heavily corporate market, I may need to back off on some of what I thought was going to, maybe 10 to 20% of that corporate will never come back. So you may need to adjust your thought process as to how your market segments play out, and how much how much more pleasure, transient business, social business can you insert into those percentages. And by the way, the demand for that business is much higher right now. And I also think that that's going to remain for a while. But I would think, as a developer, I would think, okay, so how do I tap into that? What do I need to put into my project that also has that element to it? Whether that be additional amenities, or whether that be different things that you think about doing together, with the tourism market in that community. I would think about that, because I do think that in the short run, you're going to need that. And when I say short run, first 5 years, until you see corporate and group really come back in a huge way and grow. So those are just things I would adjust my thinking to. What other amenities should I have? What other things do I need to affiliate with in order to make myself successful, both in the short term and the long term?
Got it. Yeah. Are you seeing, like owners trying to capture more revenue streams, like charging for parking, or, maybe breakfast, stuff like that? Yeah.
You definitely see that. And I think that that's good. That's a good thing. I mean, resort fees are something that is not good for the consumer necessarily. They don't like it. But it certainly is a great revenue stream for the developer. So, all those things are things that developers need to be thinking about. And I also think that they need to be thinking about, what do I do to make it attractive to a transient traveler as well? And a small example of that is, if you were thinking about not having a pool because you're primarily in a corporate market and that wouldn't do, you don't need it. Well, now you might be thinking, maybe I should be having a pool, because that's my transient market. That would help me in that regard. Same thing with spa services. Same thing with any leisure activities or things that you can, if you're in a good location for bicycles, do you have bikes? Do you rent them out? Those types of things. And I know that that's kind of, foreign to some of our thought process, but I think we have to think like that. How else do we attract a market that may not be totally what we did in the past? We've got to start thinking out of the box of what things do we put into our development that will attract a wide variety of clientele versus just one segment or two segments.
Got it. That's interesting. A lot of the commentary and discussions, I was hearing during the pandemic was, guys were thinking, do we need to move to a model that's basically as little service as possible and as light and as lean as possible, right? And it's interesting here that like now we're talking about like more mousetraps and more amenities, right, to get people in the door for experiential type stuff versus just staying in the box, right?
Yeah. And you know, you bring up such a great point there. I think in our industry, we tend to sometimes we will go too far one side and or too far to the other side. In other words, like when everyone wanted to go green and they thought, okay, you know, we're going to do this whole push of conservative and going green. So what we did was backed off on service. What we did was said, you know, we're not going to clean your towels. We're not going to clean your room. We're not going to, you know, those types of things, all under the guise of green conservation. Well, what the public saw there was that you're charging me the same rate or sometimes more and giving me less.
Right.
We can't do that as an industry. We have to say, okay, what can we do? You know, with the pandemic happens, and so therefore we're backing off on cleaning your room so that we're in the room less time, and all of these different things are being done under the guise of the pandemic. Breakfast is being backed off on, all those things. My thought is we need to come up with creative ways to give more service and yet do it in a way that is more safe. How do we do that? Well, there are all kinds of things. For example, you can do smart technology in the room where you're doing it by voice and not touching all of the, you know, apparatus in the room. Do more things like that. That's better service and an upgraded product versus just backing off on everything and not giving it to you. So we need to start thinking out of the box, to me. We need to enhance service, whether it be the technology that we can put into rooms so that you don't have to touch surfaces, whether we can do things with automating check-in and on phones. And we've already got that technology. We need to use it a whole lot more. New development needs to really focus in on those technologies that they can use, whether it be the phone that opens the guest room door, or that you are able to talk to the room and it does certain functions for you. All of those things can be done right now. And those are things that I think would just enhance the experience and doesn't take away the service from the guest, if you know what I'm saying.
Right. Yeah. I definitely do think customers recognize, you know, shrinkflation in the service sector, right? Where it's same price, but you get less. You know, the not cleaning the rooms every day thing. I'm not sure how you get, you know, safer with less cleaning, right?
You would think that, yeah.
Right. I mean, they're wearing gloves and masks anyways, right? So I mean, and you're not even in there when they're doing it.
But you can imagine. I mean, that's what we've done. That's what we've done.
Right.
And you know, it's just like with the, you know, green energy technique. I mean, they would say things like, if you don't want, you know, hang up your towel if you don't want us to wash it. Okay. And that saves. Yes, it does. But it also says, okay, you know, I'm not going to charge you less because I don't wash that towel. You're paying the same amount of money. We need to just really think about what do we need to do to enhance service, not just take it away. And even with the pandemic, how do we do things that are going to benefit our guests? And I don't know what every single one of those ideas is. I think that it would be, you know, our franchises are brainstorming about it, and they're bringing out every day. They're coming out with new ideas. Marriott, since I get something in my inbox almost every day from Marriott saying, here's a new idea that we're putting in place. They're trying to think ahead of the game, and all the other franchises are doing this as well. But just think ahead of the game instead of just taking away things. How do we do things that are going to make the experience better for our guests and give them a great experience still?
Right. Yeah. I mean, I definitely think, you know, people, especially right now, definitely need to think, you know, probably 12 months ahead, right? I mean, what happens if, we get another surge and then state and local want to shut down again. You have to prove that you're safe, right? And you got to make customers feel safe.
Essential business for sure.
Right, yeah. So I mean, I definitely think the days of, especially right now, just kind of like thinking day to day, are probably in the past, and you really need to think like what's coming down the line 12 months from now, getting ahead of that, and then making sure you're prepared for the next time this happens, right? Because I don't know how, if you're somebody that weathered the storm during the pandemic, can you close down again, or can you do it again, right? Without having some sort of preparation in place.
Yeah, it was very difficult. And I think that we as an industry, I think one of the things that we learned was that, and I think as people, we don't learn this too. Don't be so quick to give up your liberties. Don't be so quick to shut down, because it really is a very difficult thing. Look at restaurants and bars and lounges and what's happening to them, and the slow comeback that they've experienced, and the hardship that they've had to go through. We have to be careful. We have to think, when, if another wave comes through, what are the options? And I would hesitate to close down everything again. Because of the hardships that it caused. And I think people understand that and say, okay, what are the other ways that we can do this without shutting down everything?
Right.
Because I don't think that the full impact of those shutdowns has been fully realized yet.
I don't think so either. I think it was, the government did a good job of pushing it out, right? And giving everybody, well, not everybody, but a lot of people, enough kind of slack just to hang on. And hopefully, everything fixes itself out. They propped up asset prices, the grants, the PPP, all this stuff. So, and we're kind of in that, kind of weird middle zone where it's not over, but we've been through a lot, and it's definitely, there's definitely a road ahead that has some question marks in it.
You're right.
It's interesting times for sure. So let's talk about like people that are just getting into the industry today. Like, we get a lot of requests from guys that want to buy or build their first hotel. What's some of the advice for people like that, right? I mean, a lot of the stuff that they may have, been learning in the past to prepare to operate a hotel today. I mean, it's different, right? I mean, it's a different world. So like, what's some of the advice for like new hoteliers getting into, business today, maybe like getting a new choice flag, like a Comfort Inn or something like that. And they're going to be opening doors in the next 6 months or something like that.
Yeah, I think, and I don't want it to sound self-serving, but you need a good management company. If this is your first time as a hotelier, align yourself with a good management company, because, and even if in the long run, you want to run it yourself, learn from a good management company so that you know what to do. And you can set that up. I've worked with many owners where I would, come in and they wanted their, family member to run the business eventually. But we worked directly together over a 3-year period of time, and we trained up that person. It was actually the owner's son, and I've done that in different circumstances. And he eventually took over. But we had a predetermined period of time. We knew exactly what we were going to do together. We were going to train him to be able to run this effectively. And that is a very good way to get yourself not into trouble, but to put a very good foundation in place for the long haul for you to be successful.
Yeah, that's a really great strategy.
And I would firmly recommend that. I also, aligning with a great franchise, and there are so many great franchises out there, and every market has a different franchise alignment that would work best for it. So you don't necessarily have to be with one franchise all the time. There are multiple franchises that will work in different markets, and there are obviously different price points to those franchises and developments, so that would also play into that. But when you talk with a good management company, they can help you select a good franchise for a certain location. Also, they can help you to be able to, put together a program and a plan that makes sense for the individual competitiveness of that community. So, what amenities should you have? How many? What should the room mix be? Those types of things. So, involve the management company on the technical advisory side, and then make sure that you do a pre-opening sales effort. So often, and you mentioned this earlier, so often owners will skimp on that pre-opening sales effort, and that's a huge mistake, because if you open the doors having not done that, your ramp up comes while you have expenses that, once the hotel's open, are much greater than when the hotel's not opened. So you want to be able to have business on the books the day that you open the door. That comes with a pre-opening sales effort. So I highly recommend that. A good management company is able to put that in place. A good management company will do good budgets, and so that you have a good understanding of what the needs are, both from a cash flow perspective, as well as your long-term financial success of the hotel. That's extremely important. So all those things I would say are very, very critical to opening a good hotel and for getting in on it's a great industry to be in. Just do it wisely and smartly. What you may have done in the past may translate in some ways to a hotel, but it may not be exactly like a hotel. I had an owner say to me, he was a big, he did convenience stores, and he got into the hotel business. And one of the crazy things he said to me was, I don't need to have a maintenance or a housekeeping department in my hotel when it opens, because in the convenience stores, I've just always had that, around me, and I didn't have to employ it in advance. I could just call it when I needed it. Okay, well, that might have worked in the convenience center.
People hopefully weren't living in the convenience
center. Not going to work in a hotel. And, but and he was a very wise man in his business, but he didn't understand how that translated into a hotel operation, which is a little city that is open 24 hours, and you got to have all these things in place. So I just recommend working with people who know what they're doing and learn from them.
Right. That's that's a really interesting point you bring up, because a lot of the guys that we see that are interested in getting into the industry, right? I mean, they start with either, just kind of like their family buys a piece of land, or, they're kind of starting from the property level or the franchise level. But I very rarely see people start, with the management company and then put the rest of the pieces together, which it actually makes a lot of sense to start with the management company to help with all the other pieces, right? I mean, a lot of times I see management be like one of the last things they're thinking of. So yeah, I mean, that's, actually some pretty great advice that I think a lot of guys can take, right? And we said the same thing to, a lot of startups, like, hey, who's going to manage this thing, right? I've gotten answers from, I'll manage it. I'll fly in every weekend. Like, it's a business. It's not, it's not investment property, it's a business, and it needs, right, like oversight minute to minute. So yeah, I mean, that's some great advice about getting in touch with management company.
I'll tell you one quick story that we opened a microtel in Meridian, Mississippi. And this owner, he wanted his son to eventually run the business. And so we set up a program where we did the technical advisory, all the pre-opening, worked with him through consulting on the hotel to get it opened and all those things. And by the way, he invested in this. Anybody that knows, a microtel is a very economy oriented brand. So he had to invest in having a management company and doing it this way. But his son, our original deal was 2 years, and we would train up his son and get him ready. And we did that. But by the way, this hotel, we were phenomenally successful in. It was one of the best opening microtels had ever seen. In fact, U.S. Franchise Systems at the time actually came to us and had us do that same program for other microtels that they paid for, that U.S.
Oh,
Franchise
cool. Okay.
Systems paid for, because it was such a successful opening. But this, after the 2 years, the owner came to me and said, Debbie, my son's not ready. I want to go for another year in this program. And then I believe he will be ready. And we did that again. We extended for another year. And at the end of that year, his son was ready to take on the hotel and sustain what we had put in place. And I think that was so important. And what a wise man this owner was, to recognize that he wants to give something to his son. He wants a legacy for his son. And isn't that a great thing? But he also wants to equip his son with exactly the tools that he needs in order to sustain the business over the long haul. And that was what that owner, that father, was able to do for his son. And that remains the case today. So I just highly recommend doing that. Even if you are, your goal is to run it yourself, do something on the front end that makes it so that you have a running chance at that.
Right. Yeah, it's definitely a smart strategy, right? You're taking these guys from no experience to experienced hoteliers with, and they get to see all of your strategies and your toolbox, that they otherwise wouldn't have exposure to. No, that's great. It's really great advice. So your company, CUSA, what is your guys' kind of strategy for the next 12, 48, 24 months or what, couple of years, right? I mean, are you trying to use this opportunity, from the pandemic to pick up more management companies, or or management contracts, or, are you going more into kind of like special assets? Like what's next for the future for you guys?
Well, CUSA has always, when we started the company, it was in the early 1990s. So you were doing a lot of RTC and FDIC work. And then so we cut our teeth on those types of programs. And then when that kind of recovery occurred, now we then translated that into putting that sales and marketing and that turnaround expertise to private owners. And then the next economic downturn came, and we still had many contacts, and still do today, in the asset management world and the special servicers. And we did a lot of work in that arena. Today, our portfolio is a mix of private owners as well as special servicers, and those types of assets. I believe that we will always have a mix of both private owners who understand the value of an aggressive management company, who can get in there, especially during a pandemic, and keep pushing forward, not throw their hands up and say there's nothing I can do. But not only on the revenue side, we maintained that there always is something that we can do, and we wanted to make that happen. We also cut dramatically expenses. We did budgets that sometimes we were doing every 30 days through an MOP process, so that we could just adjust to revenue shortages that we saw in our expenses. You need that kind of intensity during the tough times. And I don't know that everyone, fully understands that owners look at it and say, well, here's an expense that I could do away with because, that's a short-term fix. Well, what a good management company will do is they're going to be working with you to maximize revenues and to minimize expenses during the tough times. And you don't realize how valuable that is, to have somebody looking at that every day saying, what can I do? In addition to that, and everybody will say that our recruitment of employees is extremely difficult right now. And it is.
Right.
In our industry, this is one of the most challenging things. Well, a management company has many more resources than an individual owner does. It doesn't mean that we don't face the same challenges. We do. We have the same exact challenges that an individual owner is, but our resources are better. We also have the ability to say to an employee that is looking for growth opportunities, we're bigger than just one hotel. So you're wanting to grow. Here's an opportunity come work for us in this hotel, and you can grow. So we have advantages that we bring to the table. In addition to that, we do all kinds of incentive programs for employees, and we're working with different groups to try to come up with ideas on recruitment and gaining additional employees that we're constantly working on. So we bring that benefit to the table. And I think when you look at all those things, you're looking at it saying, okay, as a company, I want to continue to grow with private owners. And yes, I do the special services work, and we're very good at it. We've been serving as a receiver for over 30 some years. So we're not new to that industry. And so therefore we have a lot of expertise that benefits special servicers. I will keep doing that. But I think private owners really benefit from having the expertise of a management company when it's in tough times. And yeah, you're going to have to, invest in that. But it's an investment that's going to pay you dividends over and over and over again if you do it wisely.
That's great. It's great advice. So Debbie, this is a great conversation. I really appreciate you jumping on and talking with me. How can people get in touch with you?
Well, we'd love to talk with you. Our website is www.1, that's the number one, CUSA.com. That's www.1CUSA.com. Adam Biesecker is our Director of Development, and he and I work very closely together on any new business opportunities, and we'd love to talk with you. You can reach out to us by phone or email. On our website is an email for info@1CUSA.com, and you can reach us there, and or feel free to email me at dcannon@1CUSA.com, and we'll get right back to you.
Great. Well, listen, I appreciate you jumping on. Thanks so much for all the info and the conversation. And we'll speak soon.
Thank you. Appreciate you.